Welcome to the Money GPS. You came here for the truth, so let me unveil that for you. Today we are going to talk about debt of all kinds. I will show you why this is more critical than we have ever seen before. The first thing I want to look at is how debt has gone up. We can see, of course, with the prices of everything rising up, that's putting additional pressure on people. They're taking out more debt as a result. The second thing is real estate. That makes up a large portion of most people's debt. And we can see that as interest rates rise, we got a big problem. The third thing is a price target for Tesla at $4,600. Too much? Well, you can ask Kathy Wood. We'll talk about that in the last section. Let's begin by taking a look at this. Credit card spending belies consumers' gloom view of the economy. JP Morgan, Citigroup, Wells Fargo saw double-digit growth in credit card spending in the first quarter. Extreme debt growth right now. We've already had a problem. There's well over $1 trillion here in this type of debt, and that is never a good thing. This is just JP Morgan's credit card spending volume. Looking at this, $236 billion right now. Extreme to say the least. U.S. consumers say that they aren't feeling great about the economy, but they have a curious way of showing it. Pessimism about the economy has been on the rise due to surging inflation and falling household income. As all those stimulus packages, they went away, so people turned to the credit card instead. Pretty obvious. We knew that that would be the case. The latest round of bank earnings show that the apprehension hasn't kept Americans from reaching for the credit cards because they might be buying the flat screen TVs and the latest iPhones, but at the same time, if people are desperate, they're going to go where it's easiest, and the credit card is very easy to use, no doubt. Actually, with phones the way they are today, you could just tap your phone, and that's it. You got that spent. No worries, I'll just pay the minimum. That's what many people are doing. It's unfortunate. So they just show you here how much people are spending. They give you the charts, and of course, you could see what this looks like. You can't grow an economy without real funds. You can't grow that without savings. But we've been exhausting all of those options, particularly since the financial crisis. Many people were very, very, let's say, okay with the fact that it doesn't matter what it takes to get things back and going again, as long as my retirement account, 401k, as long as I got a job, hey, we're all good. But you can't sweep it under the rug. It just doesn't work. It just doesn't work. And what you have in the longer term is a bigger problem. Do you want that? Or do you simply want to just pull the band-aid? Let's get it over with. Let's take the pain. It'll be a very, relatively short period of time in comparison. But no, can't do that. Borrowers have been slower to pay down their balances in recent months. Credit card loans rose 15% from a year ago. That's at JP Morgan, 14% as well. So depending on the company, you look at Wells Fargo, 14%, Citigroup, 7%, and so on. Okay, people have exhausted their savings. I've shown you that before. The personal savings rate has declined back down to the levels of 2019. Not a surprise for anybody who's paying attention, okay? This is because of the inflationary pressures as well. Look, inflation isn't close to peaking. Why prices will keep rising? They mention not just the CPI, the Consumer Price Index, but the PPI. This is something that I talk about all the time, as you see right here. Producer prices, wholesale prices, what has happened? They've accelerated faster than the CPI. But of course, that could actually mean that the CPI will end up getting to that range, okay? Because of course, you're going to see it on the wholesale side before you see it on the consumer side. That's the expectation. You could look at this with, I'm not going to cover the article. It's everything from food prices to energy prices to clothing prices. Everything is up, every category like we have never seen before. They talk about John Williams at Shadow Stats, calculating it the way that they do the inflation statistic back in 1980. So the same way that the government would have calculated it back in 1980, 17.2%. Now today, they're showing us a number that is very high, but isn't that the way that they can skew it? But remember, when it was at that rate of 17.2%, your actual interest rate was way higher. I don't remember what it was, 11%, 14%, something like this. A very high number. So you have to understand that what's happening today is extreme. It is extreme. I mean, I don't know the words to say how crazy things are. Decade high mortgage rates pose a threat to the spring housing market. Now, this will get into, this is kind of an in between because we're looking at debt, we're looking at mortgages, we're looking at real estate. Get into that more in a second. But this is because of debt. Debt is on the rise, and real estate is one of those big factors. But a lot of these economies are heavily reliant on real estate. Whether it's your realtors, whether it's your real estate agents, whether it is the brokers, whether it is the construction or the commodities that are involved here, there is so much surrounding real estate. In Canada, it makes up a very large percentage of the total jobs. You'd be surprised. Okay? And of course, spring is that big time. So we're in that now. We're coming into this time frame when there would be normally lots of inventory, lots of sales. So we're going to see, does the inventory pick up but the sales don't? That could create a soft spot in the market. And then we have this. China's policy on lockdowns. They're doing this on a city that is 3 times the size of New York. Shanghai is 3 times the size of New York. And think about this. It's bigger than the population of Florida. It's almost as big as the population of Texas. That's how many people live in this city, and they're locking down big time. Home to the world's busiest port. Just to give you some stats to try and wrap your mind around, number one, how many people are being locked down, but at the same time, how much of an impact is this going to have on the economy as a whole? Okay? Look at this. They talk about the size, they talk about the GDP, okay? Looking at the fact that it's a global trade center, manufacturing, finance, consumers, all on every single level. Shanghai is extremely important globally. That whole thing is locked down. This is going to impact everybody. Okay. And by the way, it's at 50 different cities are in a full or partial lockdown in China at this time. Powell may be about to seal a deal on a half-point hike. So Powell's about to have another speech, and essentially during this, he could kind of hint towards more of an increase in those rate hikes. We will see what happens. Of course, I'm going to bring you the updates. In order to get the updates here, you got to hit that thumbs up button because that way the algorithm will be more likely to notify you. And of course, I do appreciate that very much. Now we're going to talk about real estate. And by the way, I realize that these transitions here do trigger some people. I've received several comments about being triggered by it, but it's just a transition, so not much to be concerned about. For a home, this is talking about real estate, of course. For a home worth $400,000, that's the median home price in the U.S. right now. 20% down payment, 30-year fixed mortgage, 5% interest rate. Okay, so everything right now standard. Depends on where you live, but that's kind of the average. That would be a mortgage of $1,752. If you were to do that last year, same thing, last year, the mortgage payments would be $1,383. That's $400 difference. $400. Now that is a big jump in a mortgage payment. Huge difference, in fact. That's $4,400 less per year had you bought it the year before. So this is something that could impact a lot of people because I've shown you the surveys before. Between $200 and $400 a month is the breaking point. We'll see. The sky-high housing market finds gravity does exist. Essentially just showing us this different, they give you some examples here, but what they're saying is where we would have multiple offers, where we would have like these crazy things that were happening, like the euphoria that's leaving markets. They're talking about Oregon, Portland, Oregon as being one example, but I'm also hearing about this too, that a lot of the froth, not the high prices, but the froth is starting to slowly move away. It's too early to tell, but I will give you updates on this, okay? So, there's not much more to say for that, but Just keep that in mind, okay, as I talk about this in the coming months, because this is really key. Spring is really key for the market. Housing market shows cracks with price cuts in those boom towns from 2020 and into 2021. Places like Boise, home buyers are gaining an edge after a real estate frenzy. So in areas that were probably, I don't want to say less desirable, but certainly not where you would expect a lot of this to happen. It's not Manhattan, it's not San Francisco, and so on. Now they're starting to see much more of a slowdown. So the house prices were growing 30% or 50%, and now they've come back down to earth in terms of the growth, not the prices, but the growth. This is talking about Canada and how extremely reliant it is on real estate. But check this out. Canada's housing minister has a daunting target in front of him as his government tries to rein in skyrocketing housing prices. How? By doubling the pace of housing construction in the country within 10 years. Think about how the country's so reliant on real estate. Economy slowing down, recession potentially imminent. What do? Pump out those houses, okay? That's what they want to do. They've made this argument over and over again that we need more houses. That's debatable. You know, how many houses are actually empty? I think that the number is much higher than what they're telling us, just because of the way that people can hide that and so on. And flip the homes. You wait 1 year because if this is a personal residence, in Canada, you do not have to pay any capital gains. You just have to live in it for 1 year. So anyway, that's a different situation altogether. I think that when you are heavily reliant on real estate like this, the suggestion that prices can come down is very worrisome. This happens to be about the US, but the housing affordability index is at the lowest since 2008. It's just, where we are at today with inflation is a big difference. Now, oil is lower than where it was, but I mean, certain things today are way more exaggerated than they were in 2008. Okay. Now, let's cover really quickly, but what your friend and mine, Kathy Wood, had to say. Check this out. Kathy Wood just took her Tesla price target to $4,600. Why? Robo-taxis. That's right, robo-taxis. So I'm going to take you back in the pages of history where Elon Musk said, this is why it's possible for Tesla to have 1 million robo-taxis by the end of 2020. I didn't say 2022. I said 2020. This tweet is from 2019. If we upgrade the existing fleet, 500,000, and make at least 500,000 full self-driving cars, okay? I got nothing against Tesla. I got nothing against Elon Musk. I got nothing against anybody, okay? This was 2019 telling us that there would be 1 million robo-taxis at the end, which Kathy Wood was all on board for, which she talked about, which she reverberated through social media, that everybody picked that up. CNBC and Bloomberg, there's going to be 1 million robo-taxis on the street. The stock price has skyrocketed. Just that, oh wow, this is fantastic. And wouldn't that be fantastic? How great this would be for the company. But it didn't happen. It is now 2022, and the prospect of having 1 million robo-taxis not going to happen this year. Probably not going to happen next year. When? I don't know. Maybe at some point in the future, right? But like the euphoria is unbelievable. I've never seen any. This is bigger than the euphoria around any other company. So I just wanted to bring that to you. And if you think that Tesla will be at 4,600. I'm not saying it can't. Absolutely, it can be at 4,600. And by the way, that's as of 2026, I think she said. What I find strange is how anybody who it is, can make a forecast into 2026. I mean, it's ridiculous. We don't even know what's going to happen by the end of the year. With the Fed tightening cycle, with everything changing, with inflation the way it is, and with consumer debt at the level that it's at today. And the concern, where we're going to be at even a year from now, seems to be a ridiculous notion. Believing that we know what's going to happen in the future is just out of this world, to say the least. If you found the video informative, hit that thumbs up button. If you didn't, hit that down button. You got to share your opinion. That's all. I'll see you on the next one. Take care.